Hello traders, happy Friday. Okay, in the US it is Thanksgiving holiday at the moment, so US markets were closed overnight. And Friday it continues, so there's half a day for US markets tonight, so they will close early. A lot of traders actually take the Friday off and have a 4-day weekend. So generally this Thanksgiving time is pretty much a quiet time for markets, and there's a good chance that yes, we will trade quietly into the weekend. Having said that though, markets are firmly trading risk on, they're trading bullish. Yes, we've talked about this a few times. The reason for that is markets getting excited that they are getting a rate cut from the Fed on the 10th of December, so in a couple of weeks, or less than a couple of weeks now. But not only that, the market is even starting to get a little bit excited that potentially they're going to get back-to-back rate cuts from the Fed. So in the January meeting, the market's starting to think that they can even get another cut then. So yes, that has inspired these bullish markets. So if you look at S&P, after we had a bit of a bout of volatility over the last few weeks, the S&P has come screaming back bid, and we are only 100 points from record highs. The S&P does trade regularly 100-point days, so could we be back at record highs and making new record highs in the short term? The answer to that is yes. Morgan Stanley came out yesterday with quite a bullish forecast for 2026. They think that S&P is primed to target 8,000 plus levels. So yes, the bullish sentiment is alive and well. Now look, Bitcoin, which has obviously been a huge focus over the last month and had a huge sell-off, it has found some life, and yes, it is trading back above 90,000, trading about 91,500 at the moment. Obviously, if US equities go up and make new record highs, it's going to be very helpful and very positive. Tom Lee, who's a famous Bitcoin bull from Fundstrat, he has been very vocal, saying that he still thinks Bitcoin will make new record highs before the end of the year. So that's pretty much implying that it will have a very good December. But having said that, look, it needs to get through. There's some decent technical resistance around that 97 to 100,000 level, so it needs to clear that. It needs to start closing back above 100,000, before we can entertain that bullish thought. And the fact that it's at 91.5 at the moment, it's definitely got some work to do. Currency markets at the moment, the bigger the bunch there looks like it is the Aussie dollar. Obviously, this week we got some monthly inflation data a couple of days ago. It came out hot at 3.8%. That is an RBA now that is no chance of cutting, and it potentially next move for the RBA could be a rate hike. So we've got a Fed that's going to pretty much cut rates next month, take the Fed funds to 3.5%. And that means that the Fed funds will be below the Aussie cash rate, which is at 3.6 for the first time in 4 years. If they go in January, it's going to go even lower, obviously, down towards 3.25. And the margin differential will start widening in the Aussie's favour. I would say that is going to be a big tailwind for the Aussie. Aussie was trading around about 64.70 before that inflation data. Currently, we've just closed at 65.30, so it's up half a cent. But if we are talking risk on as well for the equities and general market, Aussie's risk currency loves that, so potentially more tailwinds. So yes, I would not be fading the Aussie. I'd be looking to buy dips, and I think that is easily probably with high conviction the best play in the currency space. And so look, next target obviously is up towards 66, but the multi-month range highs at 67 at some stage, whether it's before the end of the year or early next year. I think that is where we are going. Now, the other market that's worth watching is the precious metals market. They have fired up again, led by silver, not gold. It's having a fantastic run this week. It is only $1, 100 points below record highs, and that could easily happen. Break of that, who knows? So you need to focus and watch that carefully. Gold as well. Technically, market's been watching this huge symmetrical triangle. It closed overnight around about the 41, 55, 57 area. A break of that is around that 4170 plus area, 7180-ish. So above that, it could technically very, very bullish. And yes, run for record highs again could be definitely a realistic target. So look, a lot of markets are eyeing record highs again. So that's probably the key takeaway from today's update. But again, as I said, we're going into the weekend, so whether or not we get any big moves today is debatable. Good luck with your trades and have a great weekend. Catch you next week.